All right, we're gonna do the update like this today because again, I'm in the point where there's very little to kind of discuss really, and I think we're better off kind of discussing the market as a whole very quickly, and then diving into some more of the interesting markets in terms of what has the potential to continue to move or what's been consolidating for a decent length of time and therefore we might draw our attention back to. So I think the first thing to kind of cover off is that ETH has been the attention grabber this week. It's been a trade that I think has been in the works for a while. I tweeted before to say I think ETH was one of the easiest trades of the cycle so far, yet it's probably one of the most missed trades of the cycle because everybody was just sick to death of ETH during this patch down here. Right, this like 2200 zone was really rough for ETH. Even this area down here around the 1900s was pretty poor as well in terms of the overall psychological view of ETH, and especially as Sol was moving so aggressively during this patch of time. I think a lot of people kind of got drawn away from ETH. Now, I don't think that's necessarily like a bad thing. I think that if you're considering the opportunity through that patch of time, then obviously the opportunity was all on Sol. And depending on the size of your portfolio and whether or not you feel comfortable having split between Sol and ETH, I can absolutely understand why you wouldn't have the focus on ETH during that patch of time. However, I think ETH has also been a very simple market to be trading when you start to eliminate all of that noise that came with ETH during that patch of time, especially down at the 1900 zone and then eventually the 2K flip region. Because from the TA perspective, this area here was just kind of the flip region. Okay, so when we're talking like weekly, we're just talking about basically a region in here that is just the flip area. Okay, so this is like the 1930s. And basically, as long as ETH is above this, then it's in a pretty good position. And so, from a simple TA perspective, I think this trade was kind of easy. From missing out on value on other markets, depending on the size of the portfolio. And when I talk about the size of the portfolio, I mean like if you've got something where you don't want to start splitting down too much because the gains feel less significant, and you prefer to have a more consolidated portfolio approach where you're just like, look, I've got 10K to my name, and therefore if I start splitting down into all of these markets that look okay, it means that I'm going to have like $500 in each market, and therefore, the gains are going to feel not very significant for me. Okay, so understand that approach, but ETH has been a very simple market in terms of the trading opportunities we've seen, and even through here, just again another very simple flip, 2050s to the 2021 70s, good hold over the 3-day on the 3-day chart here. Looked like it was breaking out, failure back here, but now obviously for the last couple of weeks, this has been very strong. It's had a very, very good February. And then where we are right now is really, I think, just around what happens here at this high. Because we're bouncing here from the top of the extreme, which is absolutely fine in trending markets. And now we're just going to see whether or not we get any daily divergence develop across the highs here. Potentially, if we see some weakness in the traditional markets this week, we may get that impact across to crypto. But so far, this market is just so strong in how it's performing. You can even see here from an awesome oscillator perspective, you see the drop off in momentum as we grind up through here. And then look how weak and pathetic the bearish crossover is. So remember, we always look for that momentum. When we see the awesome oscillator slowing down, we see the divergences developing, we look at what the momentum is on the other side. How much strength do the bears have? And, the answer through this region is absolutely none. The correction is awful. The upside is far more significant once again. So we're approaching now levels 3,300, going to be significant. And then we're into, kind of other territory once we get through there. But we're now significantly inside this, just the same way that we were on BTC. Right, that comparison chart with BTC that I always tend to pull up, this one here. So you got this one, and then we'll go to the BTC chart on the left-hand side here. and you can see the monthly. And this was the comparison. I used to do this comparison a lot with when we were at lower prices. Okay, same structure, breaking out of this sort of consolidation region that we've got in the monthly, trading up towards this monthly supply region, up towards the monthly supply region, straight through. Really strong market right now. It looks very, very good. So that leads us to another market which maybe you've missed out on. Okay, and another week passes of the bull market where you're not taking advantage. And so what can we do? Where can we look at? Well, we want to be looking towards markets that we know have had strength previously, but I also believe that this market really is in the situation where it's rewarding exposure in the market, classic bull market approach, versus having to like pico time everything or stress too much about asset selection. I know that sounds crazy. Like, look, you can look at the strongest markets time and time again, and you can try and get your rotations right. But a lot of people are failing at that as well, which plays into the fact that they feel the bull market is moving too quickly. The bull market's going to end, and they aren't taking advantage of the environment and the conditions. So what I've been doing is investing in things and buying things that I believe have very strong technical setups on the higher time frame. And now it's just a case of them waiting to play out. And I've obviously been quite a vocal champion of something like Matic, right, on the timeline, because for me, again, this is a very simple chart. It's a great chart with great signals. Holding on to the weekly support level, it's done so for a number of months. We swept all of the lows down here and still closed above, and now we're starting to see fresh weekly highs. So something like Matic, I think, is a very good example. It's not the hottest market in the world. It's not the one that everyone's rushing to buy, but it's a very easy, clean TA chart in an environment where things are just moving. You saw Uni at the tail end of last week, 50% up in the day. You just catch one of those and you're laughing. So for me, this market is really about making sure that you have exposure, depending on whatever principles you're using to build that exposure, whether or not that's based on TA, whether or not that's based on the hottest market in the rotations. But the market rewards exposure, and the market rewards you having the patience to see the setups through. It's the same with ETH for me, and you'll see that chart that I put up before, which that's my position. My average is $2,000 because I was buying all the way through that patch of time that people were pissed off with ETH. And I knew it was just a case of waiting until the momentum came through. And now it's here, and I get to sit back and just enjoy the move while everyone else is scrabbling around for exposure. And that's the position you want to be. That's the dream situation you want to be in. And the only way you get there is by taking exposure and then having the patience to see those setups play out. All right, but when we were talking about hot markets, we'll talk about something that historically has been a very hot market and has slowed down in recent time, and that's INJ. So this market has been a monster of the bull market. It has been one of the best performers. It is, significantly up from the lows. It's significantly up from October. We're already talking about, like a 5x to where we are now. But all this is currently doing is consolidating. Now, this is a market that has a lot of eyes on it. And I think rightly it has a lot of eyes on it. I've seen some people discussing the fact that INJ is kind of like too crowded as a trade, which is always bollocks. But the reason that this has a lot of eyes on it is because of this, right? Because this is what it looks like. And so this huge consolidation, and this is 3 months now of consolidation. This is 3 months of chopping around. This is a very good looking chart. And actually the price action that we've seen recently, especially since, basically the 19th onwards, has been really good, because what we've done here is we've pushed into this region here, taken out the highs from here, and now we've taken out all of these lows as well from the start of February. Really aggressive move to the downside. You see, come all the way down here. And starting to see some strength return after the last couple of days again. Higher time frame, starting to cool off, bringing that RSI right back down towards the 50 level. It's where we like to see it. And we're hoping for, obviously, a push through here. This just being a consolidation patch that we're in at the moment. And then the upside of that being another significant trending move at the end of a 3-month consolidation period. So I think INJ remains a market to keep an eye on. It remains a market that looks very attractive. I think then you've got other markets, and this is a market that had a huge move after the uni news. But it's another market that, from a simplicity perspective, has been primed for this move for a while. Okay, so just speaking about that kind of simplicity of setup, then SNX is basically just retesting former weekly resistance, made the clear breakout. It's been grinding down over the last few months, holding the weekly level, RSI back down at the 50, and now starting to impulse away. And people in the Haven will know that this is one of the monthly spot positions that I own, because the monthly just represents the clean monthly breakout of this range down here, which is basically 2022, 23. And we're in a really solid position here. This is another Dino coin. Like, this is Dino shit, but simple setups, exposure in the market, and hopefully rewarded for doing so. And this is a fresh position for the sideline portfolio discussions. So then we go to other markets and we take a look at stuff like Sol. Right, and the current Sol positioning. Now, again, Sol is kind of similar to INJ in terms of it's an incredibly strong performer for 2023, and we're now consolidating still here. So it's unfortunate that, you know, for the Sol maxis, that Sol is doing the consolidation now and ETH is running. Now, if Sol starts to break out, I don't know, maybe nice timing with blast unlocks, maybe there's an opportunity for some switch in that. Maybe there's some opportunity for some Sol strength. But this isn't a bad position for Sol to be in at all. This is a really good position. And when the market looks like this, and we're in one of these consolidation phases again, super attractive to pay attention to. Because the simple trend, consolidate, trend pattern, these patterns here, trend, consolidate, trend, are so simple yet so effective when it comes to bull market price action. So we're just looking at capturing the breakout here and then riding to a significant high. And it's that time and time again, you can just play this continued structure. Right? Trend, consolidate, trend. Render has done it. Okay, Render is another market that has done it. Right, this is my initial entry on Render. And my initial entry is this consolidation pattern here. Okay, consolidation pattern in here. Same thought process. All right, you've got trend, consolidate, trend. Super simple. And even if you're playing things on a shorter time frame, you've got your very strong impulse and you're very happy with the 220 up to the 350 move. And it takes 5 days. And then obviously if you're holding, then you're going to be significantly up from here. Okay. So we like these patterns. So right now, your job is to identify the markets with the best, most simple TA and wait for those to begin to play out. I'll cover one more, FTM. Another, again, like kind of like Dino for what we're talking about here. But when we talk about simplicity, this is a monster, okay? Because this is basically the link range. We're now talking about a range from May 2022. So we're approaching nearly 2 years of ranging market in here. Okay, you see it on the monthly. 2 months of ranging and the potential for breakout and a monster move if that happens. Remember people talking about this breaking out previously and what it could do. And I'm pretty sure that was probably around these highs, maybe even around here. Back to the RSI 50. Starting to get some strength again. If it breaks through this 5-3, it probably becomes just a very simple trade in itself. You may think you're late at 5-3 because this is going to be up another 30% from here. But actually, it's probably just the beginning of what is a 2-year range breakout. So what we're looking for is simple entry criteria for getting involved in the market. As I said, I still believe that you don't necessarily need to be just staring at those hot markets to be making money in this environment. The environment is rewarding enough for having exposure, not just for, you know, having the best asset selection or doing the most optimal rotations through the market. where people are falling down is they're trying to rotate through the market and end up missing everything along the way because they're rotating too quickly. They're rotating into things where they've missed the initial move and now it consolidates and their capital's locked up again. So I think they're missing like a number of things. So my personal preference at times like this is find the best TA plays, find the simplicity, get involved in the market because the market is rewarding participation. And then the other markets that we should be interested in are those hot markets or the former hot markets that have cooled off over the last 3 months. So we've got some markets that are doing the higher time frame consolidation, have been developing 3-month ranges, and now look as though they're starting to see that impulse again. And even if they're not ready to break out, they should be high up on your watch list because when they do break out, they're probably going to yield significant returns again and be one of those markets everybody's talking about. Action is far more important than anything else right now. Exposure is so important. And then the final caveat will be the longer that we go on without one of the significant sell-offs and snapbacks and liquidation runs, the closer we get to that event happening. Okay, so leverage isn't going to be your friend, especially on the extended markets, because there's going to come a time where we get that flush and that wipeout. So you have to have the position building logic, position building mentality. You have to think about how you establish and structure your positions. You have to think about your use of leverage. You have to think about that possibility of significant downside in a wipeout move, right? That funding clear out. But we keep going. We keep pushing it. Because if you sit on the sidelines and just wait for that event, right, the longer it just ticks on, where you don't get it. And it actually starts to impact your actions and forces you into doing things that you really shouldn't be doing because you've been pushed to the extreme psychologically in waiting and watching everything continue to pump. All right. And remember, you can sign up at the foundation if you want any more details on position building and looking into that side of things and how we structure ourselves around this, around this environment and building for this. You can obviously check out the Haven if you're interested in seeing the sideline portfolio. And obviously, you can stay tuned on Twitter. But good luck in the week ahead.